Welcome back. You've joined us on Market Fatafat right here on ET Now. I'm Ashesha Advaryu, with me is Ankita Saxena, and we've now slipped into the red. After the kind of recovery that we saw yesterday and earlier today, we have now slipped into the red. Nifty below that 25,500 mark. Sensex is also below that 82,100 mark. So clearly, we have corrected quite a bit from the highest point of the day. Nifty Bank, that one also below that 61,000 mark. IT stocks did make a comeback in trade yesterday. The trend continues to some extent in today's trading session as well. We have other stocks which are gaining in trade. Tata Motors PV, that one is up 2%, the biggest gainer from the Nifty 50 pack, followed by Max Healthcare, BEL, Eicher Motors, Maruti Suzuki, Adani Ports, all of them gaining in excess of 1%. On the losing side though, we have Trent. That one is losing its ground. So Trent is down 1.7%. Power Grid and NTPC, both these power stocks continue to remain under pressure today. Adani Ports, however, is bucking the trend, but we have several other stocks which are under pressure. Coal India, Bajaj Finance and Adani Enterprises are also some of the other stocks from the losing side. But all in all, we've given up all of those morning gains. And Ankita, yes, we are under pressure today.
All right, moving on then, as SEDEMAC Mechatronics gears up for its OFS-backed IPO on March 4th. Professor Shashikant Suryanarayanan and Amit Arun Dikshit outlined the company's tech-driven global auto component strategy, expansion of its ISG ECU, which loosely translates to integrated starter generation capacity, and the fresh plant investments to meet the rising demand. Let's get you all the action from the primary market of this IPO. Let's take a look at what the management had to say about this.
Hello and welcome to IPO Central. You're watching interaction with SEDEMAC Mechatronics. It's a company, tech company involved in manufacturing electronic controller units for two-wheelers and three-wheelers and others electronic segments. And joining me today is Shashikant Suryanarayanan, who is the MD of the company, and Amit Arun Dikshit, who is the joint MD of the company. Their IPO is opening on March 4th, closes on March 6th, price between 1287 to 1352. It's a OFS of 1087.5 crores. That gives the company a value of roughly around 6,000 crores at the upper end of the price band. Shashikant, let me begin with you. It's an OFS, but give us a sense of the industry that you're working on. You're largely dealing with two-wheelers and three-wheelers. What kind of products that you have, and what is the business model that you have?
Yeah, so the company has two segments. One is mobility, which is dominated by two and three wheelers, and the other is industrials, which is currently dominated by generators. So these are our bread and butter markets, two and three wheelers and generators. In all of them, we supply what are called ECUs, okay? So electronic control units. And we supply these ECUs to the major OEMs of this market. So the big two, three-wheeler manufacturers or the big generator manufacturers. Two, three-wheeler manufacturers is heavily India-centered, and the generator manufacturers is both India and the US. We also export some units of electronic control units for e-bikes in Europe. So it's a mix of India, US and Europe as our current customers, and the markets being two, three-wheeler and generators. So these electronic control units that we put together, these typically incorporate some sort of novel technologies that we have built. Okay, so what we mean by that is the combination of parts that we suggest that goes into these vehicles, let's say. That combination of parts did not exist before, prior to our intervention. So it's a big statement. The automotive industry is a fairly mature industry, and people who can come up with new combinations of parts that incorporate some special technologies are very few. So we are one such company from India, and there aren't that many companies in the world as well who can do this, but definitely very rare in India. We have been able to build fresh technologies which get incorporated into these parts that we sell and carry it to market and see widespread adoption. So we sell electronic control units which incorporate some special technologies.
Amit, just to come in here, when you say ECUs, it's basically the the starters which we use in our scooters. Earlier old days, it used to be a kickstart. Now it's a starters, and ECUs are used for that, right? In that sense, to make it very simple for our viewers.
No, it is. No, it is not. It is not exactly that. You are right that earlier there was kickstart. Kickstart was used for starting a two-wheeler. Later on, there was electric start. But when electric start came in, by default, when you when you think about electric start, it was with what we call starter motor based system. So in a starter motor based system, there is a separate motor for starting the vehicle and a different electric machine for charging the battery once the vehicle has started. What we have built the ISG ECU for is a separate configuration. It's what is called integrated starter generator. It is different from starter motor. It is more than just electric start. In the case of ISG, only one electric machine is used both for starting the engine, and then the same machine is used for charging the battery once the engine has started. And this whole operation is controlled by by a motor controller, which is our ISG ECU. So that is the product that we sell.
Shashikant, if you can give us a sense of the kind of capacity that you have. You have two manufacturing facilities based out of Pune. What is the capacity there, and does both the order mobility and the gensets happen from the same facility? And is there a capex that you have in plan?
Yeah, so we measure capacity in terms of what we mentioned in our RHP, in terms of what we call as ISG equivalent units. The reason for that is we make different controllers, and you want to translate that to how many equivalent of ISG can you manufacture. So our capacity right now is 6 million ISG equivalent controllers per annum. Okay, and our RHP says that our main plant is currently almost full, 90% plus utilization, and we are putting up 2 more plants mentioned in our RHP. One is, both of them are in the Chakan area again, and one is a big plant expected to become our mother plant, what we call as MF3. So there is capex going into expansion of plants, and of course there is capex going into R&D. So roughly you can take it as for every additional dollar of growth that we need to do, we need to invest about 0.15 to 0.2 into the capex for the sort of products that we are building, and we are more than comfortable to fund that through internal accruals.
So what is the total capex plan, Amit, if you can come in here, what is the total capex plan that you have envisaged for the 2 new plants? And as Shashikant said, that is purely based out of internal accruals. So what is the rollout plan or going commercial with those 2 plants?
Yeah, so the capex will be built depending on the capacity that we want to build. So there will be a base capex for putting the infrastructure in place, and then based on the envisaged demand, the further capacity building will be done.
When I mentioned that for every additional dollar of revenue, so suppose we expect that we are going to do more 200 crore additional business per year, then we will have to invest about 40 crore into the capex, about 20% of the 200 crore of additional business per year that we want to do. Okay, so how much that will be based on our estimates of demand going forward. It's not a fixed number.
Okay, so when you say that your current capacity is around 6 million ISG units for you, what is the total ISG units that you're looking at maybe in over the next 2 to 3 years?
That we will not be able to say. What we have done is that for every 6 months to 12 months forward, we keep projecting about based on what orders that we are seeing on what sort of capacity that we need to build. So we will not be able to give you a definite figure on we are building 100 crore worth of plant equipment, but more that this formula that for each 100 crore of additional business, we will have to invest about 20 crore into Capex.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back.